What's up, Phoenix? This is Kelly Cook. This is another edition of Everything Live. I'm so excited. It's a Monday, the best day of the week, and we're going to dive in and discuss some really interesting things, some breaking news to an extent when it comes to homeowners insurance, the market update, and the Phoenix Coyotes, the Arizona Coyotes, I should say. What's going on with the Arizona Coyotes? Are they no more? Are they really going to Utah? Like, how did this happen? So we're going to discuss that. It's of course in development, right? Keep you informed of what's going on in the marketplace in the Phoenix area. And so we're going to jump in here and go over these things today on this edition of YouTube Live. Everything Phoenix, guys. So we're going to jump in, and I appreciate everyone taking their time to jump in and see what we got going on here in the Phoenix area so you can be fully informed on what's happening. But before we do, by all means, please comment. Please let us know where you're watching from. Please ask a question. Let's make this a two-way conversation. Let's rock and roll. But we're going to share my screen without any further ado. And I guess I'll go a little bigger there. And we're going to jump right in. According to the Phoenix Business Journal, the hidden cost of homeownership is mounting and approaching crisis levels. Why is that? Home ownership is mounting. The cost is going up. Now you have this interesting picture right here. And you have homeowners insurance. Crisis is driving up housing cost. That's true, guys. I think if everyone, guys, if you have your house escrowed, okay, and it goes through and the process of, obviously you're paying one payment a month and it is going to your mortgage payment. But in that mortgage payment, it's escrowed. So you are also paying for the insurance and the property taxes. If you probably, like most of us, have received a letter at the beginning of 2024 or around that time stating that your escrow account is short. You have a shortage. And so you have two options. Either A, write a check and make it full, or B, you simply just increase your monthly payment and it'll be made up over the next year, 2 years, 3 years, whatever it may be. So that is happening a lot right now because homeowners insurance and auto insurance is going through the roof. What can be done about it? And but first, before we go there, what does this all mean? Let me go back here and let's dive further into this article, okay? Homeowners across the country are facing an insurance crisis and it's driving up the housing cost. About 72% of homeowners said their policy has increased over the past year. Meanwhile, about 8% of those surveyed said the insurance company stopped offering coverage for their home, and another 9% of homeowners said they are worried their insurer may stop offering them coverage, okay? Homeowners are living in areas where insurance premiums are surging, are at risk of seeing their properties gain less value from homeowners in areas with stable premiums, said the chief economist from Redfin. Guys, this is real. This is a real thing. So obviously, if you have homeowners insurance premiums skyrocketing, that leaves less money for someone on their monthly payment to buy your house, and therefore your value is not going to increase as much. But how does that work when you have a situation where it may be an area of the country that doesn't have that much that many natural disasters, but is sought after? Let's call it the San Andreas Fault in California, in Southern California, right? And let's talk about that for a second, because we all know Southern California is a well sought after, in demand place to live when it comes to weather. Now, obviously, taxes and some state guidelines and politics are driving some people out, obviously, and have been doing so. However, because of weather and because it's LA and those places, it's still a well-desired place to be, especially if you have means or funds. So if that's the case, how does that offset your appreciation of your house? Because it's a place people want to go live, let's say, because of weather and those things, but because the monthly payment is going to be so high, people can't afford to do it. Well, I think you're going to see the middle class have a say in this. The middle class will not be going those places as much because they are really buying a monthly payment. They're not buying a price. And if that's the case, which it is, most times people are financing, then you are looking at potentially people moving to different places of the country that don't have as many natural disasters, that are more safe, and therefore the insurance premiums are lower. All right, so going back to this article, it says that recently State Farm said it would not renew 72,000 homeowners insurance and commercial apartment policies, a cut of about 3% of its policies in California, guys. 72,000. Los Angeles-based Farmers Insurance Company said last summer it was discontinuing a new coverage of auto, home, and umbrella policies in Florida because of heightened risk of hurricanes and other severe weather events. Okay. And then AAA said it will no longer renew combined auto and home and umbrella coverages in Florida as well. This is wild. So, what can you do, guys? What's going on here? This is a real problem. And, guys, because of inflation, this is not going to slow down anytime soon. And, guys, did you know that with the CPI index, okay, the CPI index that really recently came out 2 weeks ago, that therefore was showing inflation continuing to increase, not decrease like we were all hoping. Did you know that in that report, the main reason why the inflation report showed inflation going up and not going down? You guessed it, insurance and auto insurance, homeowner insurance, especially in the automobile side, it increasing so much due to a lot of different factors. And that is one of the main reasons why the CPI index is showing that the inflation is continuing to go up. Okay. So going back to this article right here, you have insurers rely on reinsurance companies, right, that cede some losses when they go over and above. And thank goodness for those reinsurance companies. But now the reinsurance companies are pulling out of reinsuring the insurance companies. And therefore, you have a situation like we're in today, okay, where homeowners insurance is skyrocketing because a lot of people are discontinuing the insurance of certain things. But they are citing the same factors, guys, right here. The same underlying coverages, an increased number and severity of natural disasters, inflationary pressures, and labor and material shortages. It's pretty wild, guys, what's going on here. But here, we'll wrap this up here. But additionally, 34% of real estate agents surveyed by Redfin also said they have seen an increase in homeowners insurance premiums during transactions over the past year that rose 73% in Florida and 64% in California. At the same time, home buyers in today's market are increasingly faced with an inconvenient but inescapable truth. There are fewer homes for sale, and the ones in the market are often in need of big repairs and renovations. So as baby boomers stay in their existing homes longer, that has resulted in a generational tug of war with big implications in the future, guys. Also, did you know who had the lowest, I think this article also talks about the lowest increase of homeowners insurance? The state of Idaho. Okay, so if you want a small insurance premium, head on over to Idaho, okay? And you will get that there. All right, so now let's go over here to auto insurance, okay? Why did my car insurance rates go up in 2024? There's a perfect picture of what you look like when you open your new bill for your insurance company, right? I mean, I was thinking the same thing, right? Like, is this for real? But rising prices are everywhere, and more people are struggling to buy things they need. That includes car insurance. Car owners are getting renewal notices with rate hikes and significant rate increases. Why is my car insurance so high? Well, here are the reasons, guys. Your particular driver profile, which includes factors like where you live, your age, and your driving record, influences what you pay for car insurance. But rising car repair costs and an increase in disaster-related claims are significant reasons why car insurance rates are surging for many drivers. Now, here are the reasons. Location. Are you in a place where there's a lot of vandalism or not? Or natural disasters or not? Urban or rural? Okay. Age, gender. Oh, here you go. Idaho for car insurance. The least amount of car insurance is in Idaho. And in New York, it's just the opposite. Everything's expensive in New York, right? $4,700 per year on average in New York. Pretty crazy. But the average nationwide is $2,118. Okay. Age and gender. That's right, guys. Typically, females have a little bit cheaper car insurance. That's right. But in these 6 states, they passed laws that prohibit car insurance being underwritten per someone's gender. Okay. Marital status, education, occupation, credit history, home ownership. Now, driving skills. The extra driver and vehicles, you can bundle from there. Driving experience and mileage. Speed ticket and accident record. That's a big one. Okay. The national average rate increase is 45% for drivers who cause an accident with property damage. So don't do that. Don't do that. Okay. DUI record. Don't do that either. Choice of vehicle and safety, car make and model. That matters, guys. And here's the 3 properties they found that have the least expensive auto insurance: the Honda CR-V, the Jeep Wrangler Sport, and the Subaru Crosstrek. By contrast, you're the most expensive cars to insure, and your boy right here has one of them, the Tesla Model S. Yep, not good. Lexus ES 300H, and the Volvo XC90. Okay. Now, is it financed or leased? That matters too. That plays a role. Garage parking, that plays a role. Thefts, vandalism, car trim and safety features. Okay. Choice of car insurance company, that matters as well. Insurance lapses, all these things go into play when a company is underwriting you for your auto insurance. Okay. Now, what can you do? Factors that are making car insurance so expensive: post pandemic driving habits, inflation, guys. You can't really do much about that. Our government leaders are the ones in charge of that, and monetary policy and all that fun stuff. Climate change, that can't do much about that either. Individually, we can, I guess, right? Slow time over process. Rise of electric vehicles, they're more expensive to fix. Broken supply chain shortages, theft, slower claims. Now, here's the solution. How can you reduce your insurance cost? Here you go. All right, number one, choose the right car. That matters. Okay. Take driving courses and drive carefully. Maintain a good credit score. Compare multi-car insurance quotes. That's a no-brainer. Choose the right coverage and deductible. Bundle auto and home. Check for low mileage rates and pay per mile programs. Discounts. Pay premiums up front. Okay. Those are the ways to go about obviously getting this better. But guys, that's only what you can do within your grasp, with your control. But there are other things that you obviously can't do anything about, like the things we just discussed. So unfortunately, that's how it is right now. But hopefully, as the price of automobiles, supply chain management gets better, and the cost to repair these things go down, so will car insurance. And hopefully we can have a break from a boatload of natural disasters happening in our country as well. That will also help. Lori, what's going on? You're saying here, oh, this is good. I'll stick with my 2006 Saab, low insurance rates. Yep, that should be on the list. But they probably go back to '06. That's probably the problem. But that is a safe car, and that's why Saabs or Subarus are probably going to be up there on that list. So very good point. All right, now I'll share my screen, and let's go to a couple of things. Let's go to a little housing market update. What do we got going on here? Check this out, guys. As of April 21st, the average price per square foot of all areas and types has breached the $300 price per square foot level once again. The record stands at 306, set in June of 22. 306, guys, we're almost back to the record. But I thought the market was going to go down, Kelly. Yes, that's what the media would have you believe. But right now, it continues to creep up. We're almost back to where we were June of 22. Now, in 22, when the record was set, this is followed by a 14% correction down to a low of 263 a square foot on January of 23, which was partly fueled by an excess inventory sell-off from the iBuyers, Open Door, OfferPad, Zillow. Since January 23, prices have been generally moving higher. We were at 279 1 year ago, and prices have risen 7.3% over the last 12 months. Let me repeat that, guys. Prices have increased 7.3% over the last 12 months. They would only have to rise by 2% at this point to establish a new all-time high. Okay, so if that's the case, what goes up must come down, right? Guys, I would just say, what is that black swan event? What is that event that's going to make that happen? Does anyone know? There could be a lot of things, right? There could be, North Korea could launch a nuclear weapon. China could do something. I mean, there could be some global scale events that are even more serious or impactful than what's going on right now in the globe, in the Middle East and Ukraine. So we'll see. But with all that stuff that's bad going on right now, it's still not phasing the market in terms of pricing. Why? Because at the end of the day, the housing market is going to be based primarily on supply and demand. And right now, we have a supply shortage when it comes to new housing. So if you just take the emotion out of it, you will realize that as the demand increases in a certain marketplace, which it is doing in Phoenix, it is doing this in Phoenix. We are having an influx of population growth. And if you don't have the demand to meet it, that's going to be a problem, and prices will increase. Now, 7.3% over the past 12 months, that's pretty good in a marketplace where you're having 7% interest rates across the board on the 30-year fixed. So what could happen if those rates go down 1 point or goes down a half point? Prices aren't going to come down. I mean, it's going to drive more demand into the market, and you're going to see an influx of people jumping in the market, and you're going to see those houses getting eaten up. And when they get eaten up, unless we have a boatload of demand or supply hitting the market all at once or over a period of time that's in the short term, a short time frame, I mean, guys, it's just simple supply and demand. I know I'm in real estate sales. I am. I'm a real estate agent with Real Broker here in Scottsdale for 19 years, guys. I know this area very well. I've seen the ups and the worst of the downs and back up again. And I'm not just trying to sell you something. I am not. I'm trying to just simply lay out the facts and let you come to your own conclusion. So please don't think I have a hidden agenda, because YouTube Live Everything Phoenix is not about that. It is about providing value to people at the highest possible level, making us better, knowing that we don't know it all, but yet allowing people to make decisions for themselves based on the data alone, not the national media and not emotion, but data alone of the micro niche market that is Phoenix and all the suburbs. Okay. Speaking of which, I'm going to go back to my screen and we're going to talk about the different areas. Here you go. These are the suburbs, guys. You can see in the suburbs, you have Chandler, you have Gilbert at the top, leading once again with Glendale in third spot. And look at the numbers. Chandler, wow. I know Intel and all the tech companies in Chandler have a lot to do with this, but kudos for Chandler for staying up there and continuing to defy the odds and increasing on the CMI, the Crawford Market Index. Okay. Then you have Glendale, Tempe, right? Mesa, Avondale, Phoenix, Fountain Hills, Scottsdale, and Peoria rounds out the top 10. Now, all of these are in a seller's market because 110, 90 to 110 on the CMI is a balanced market. If it's above that, seller's market; below that, buyer's market. And right now you can see what's going on. So again, Buckeye, Maricopa, Queen Creek, you are bringing up the rear on this again, but don't sleep on some of those properties, those areas, because they won't stay low forever. That I can assure you. Okay. All right, let's move on here. Now, this is another interesting graph, I thought, because this talks about appreciation. We just talked about a 7.3% across the board year over year in average price per square foot appreciation. Well, this graph right here shows you the breakdown per price ranges. Now, look at over 10 million. This is interesting, guys. Over 10 million, the ultra luxury year, the change in monthly average price in the season, mind you, the season that is in the Phoenix area, it has gone down. Now, there's not that much of a sample size in the above 10 million price range. Now, there's enough, but there's not that much. So it only takes a few of these properties come onto the market or have a couple sell that were like, going down or price reductions, things of that nature, to have that segment move a lot. Well, what's interesting is 7.5 to 10 million, you're up 2.2%. And look at this one, guys, $7 to $5 million price range. Look at that. It is up 34.6%. The amount of money that people have and are choosing to pay to live in the Scottsdale, Paradise Valley, Phoenix, Chandler area, and then some other ones, Fountain Hills, Cave Creek, you name it, okay, where they have $5+ million properties. That's incredible, guys. That is incredible stat right there to show all you guys that the market is resilient down here because of all the positives this city has going for it, especially in the short-term future. Then you have 3 to 5 million, 7.3. You have 2 to 3 million, 9.7. You have 1 to 2 million, 5.2, and 1 to 1.5. Guys, it's up everywhere except for the ultra luxury above $10 million. Pretty wild, right? Pretty crazy. I think it is, and it's a testament to the marketplace here in Phoenix because, guys, rates are still at 7%. Rates are still at 7%. Okay. And then you have some more development we're going to jump into right now. So let's go. Here we go. All right. Speaking of which, let's go. Okay. We covered that. Let's go in here. Well, the headline, Millionaire Moves. The number of $1 million earners is skyrocketing. You can see right now that it went from 608 individuals to 873 in just 1 year time frame post-COVID, guys. This is the post-COVID effect. That's interesting. So we won't spend too much time on this. Just wanted to throw it out here, but this is what I want to talk about. NHL Commissioner Coyotes owner revealed details of team's rushed move to Utah. Guys, this is true. Our beloved Arizona Coyotes in the National Hockey League are moving to Utah. But the Coyotes, the franchise of the Coyotes, is actually not when it comes to likeness and the namesake. Interesting, right? So let's cover what this means. So there they are. The Coyotes organization is going to Utah, Salt Lake City, and they will be owned by the same guy who owns the Utah Jazz basketball team. Okay, so they are stoked about it, as you can imagine. And People in Arizona, not so much. Okay. But here's what happens. Here's the good news, guys. The silver lining is this, that the owner of the Arizona Coyotes has been able to work out a deal with the NHL in which he can retain the franchise name and the likeness of it, and it'll be an inactive franchise for 5 years. Over the course of 5 years, as long as he is able to build a stadium, a NHL level style stadium, okay, that the NHL has agreed to allow and reinstate the active franchise that is the Arizona Coyotes so that they can start playing again in the National Hockey League. That's at least a silver lining, if there is one. So immediately, the team, employees, players, payroll, and whatnot are all moving, organization structure, all moving to Salt Lake. That's a bummer. But, and they will play at there next season. However, they don't have a name yet. They said they might take them a year or two to come up with a mascot and a design and a name. So the guess is anyone's at this point as to what they're going to be called. Salt Lake City or Utah HC Hockey Club? I don't know. But it's possible. It's been done before with other franchises when this kind of thing has happened. Okay. I mean, what? Washington Football Club, the Commanders were the Washington Football Club for a year, right? So that could possibly be the case for Utah playing in the NHL next year. But the good news is that they fully intend to keep Murillo, fully intends to buy that area we talked about last week in Scottsdale, Phoenix, at the 101 at Scottsdale Road on the northwest side. Buy that land and develop not just a world-class stadium, but also commercial, multi-use space and a big development project. And possibly, guys, possibly even, check this out, an amusement theme park. Ooh, that would be nice because we don't have one. Now, they're building one out there by the VAI Resort in Glendale, the Mattel theme park. That's going to be awesome. But man, I want a big one, like Six Flags. I'm not sure that's going to be this, but that would be really, really cool if it was, right? So we'll see what happens. First things first, the owner has to secure that land at public auction in, I think, June or July. And that's the first step, June 27th, okay? Right there. That's the first step to take as to getting a stadium and arena built so that the Arizona Coyotes can exist once more 5 years from now. So fingers crossed on that, okay? Fingers crossed. There we go. All right. So that's the deal. The Arizona Coyotes. It's a bummer. We won't have hockey, professional hockey in Arizona for the next 5 years, most likely. But I guess we can take a short flight to Utah and watch them play there. I don't know. All right. Next one. Here we go. Guys, did you know that drones are becoming a bigger and bigger thing? Now, I know you know that. But specifically in Arizona, Amazon drones could start delivering packages in Arizona this year. There's one right there, guys. Interesting, right? Amazon plans to deploy the new MK30 delivery drone on its same-day facility in the West Valley city of Arizona City. Arizona City in the way West Valley is the one that it's going to be flying out of, okay? And Tolleson, okay? So Tolleson, which is located about 20 minutes outside or west of downtown Phoenix, okay? It will start flying by the end of 2024. So maybe if you're someone who's looking to buy a stock and you don't own Amazon, maybe it's something you should do or consider because it's probably going to drive the stock up, assuming it works out well. If it's a disaster, it could be just the opposite. That's why they call it gambling, I guess, right? Or investing, right? Anyways, so there's a Tulsa facility in the west side of the Phoenix area, and you saw the picture of the drone. And here's the thing: the type of product this can be ordered for drone delivery must or have to meet weight limitations of up to 5 pounds, and are typically smaller items like food, medicine, batteries, which are placed in a package inside the drone. They started testing drone deliveries in College Station, Texas, and Lockford, California, a couple of years back from specific prime air delivery centers. The company said it also has delivered thousands of items to customers in less than an hour, since starting drone delivery in 2022. But it's coming to Arizona now, so this is interesting, right? Hopefully, it will be a good thing. And of course, the governor, everybody's on board for it because we're going to be trailblazers. And the good news is it says it will create less emissions for the atmosphere, supposedly, I guess, right? It makes sense, I guess. If it's flying around the air, dropping things down as opposed to a big truck delivering it. So we'll see. But that's the deal here for the drones in Arizona. Pretty cool, right? All right. In Paradise Valley, a vacant land parcel sold for $42 million, guys. There it is. There's a picture. And you can see it's a 27-acre vacant parcel of land right there that was purchased in 1999, I believe, for a whopping 1997 for $6 million. So this guy bought it for $6 million. He held it for almost 30 years, 27 years, whatever it is, right? And now he made $42 million. Well, sorry, take out the six. He made what? What's that? $36 million. Not a bad ROI. So if you're looking for a good investment that you want to hold on for, I don't know, 27 years, buying some land in Paradise Valley, right here in the ultra luxury area of the Phoenix market, probably a good idea. Let me know. I'd be happy to help you out because we do have some lots for sale in Paradise Valley right now for an acre. Okay, this is 27 acres. It's rare, but that's a really big deal. There's Joan who brokered the deal on that side. So, anyways, we'd love to help you out if you have any interest in investing in Paradise Valley land or houses, either one. We're your people. We can do it. We just sold one in PV just the other week. Okay, here we go. Yelp ranks East Valley Pizzeria among the best for Chicago-style pies. Where is it? What's it called? Look at that, guys. I mean, it's lunchtime here. I'm kind of hungry. It's probably lunchtime, maybe where you're at. Maybe you're a little ahead of me. Maybe it's almost dinner time if you're on the East Coast watching this. Ooh, that looks good. It's called Vero Pizzeria. Okay. The third best Chicago-style pizza in the U.S. and Canada can be found in Queen Creek, according to restaurant review platform Yelp. That's at Vero Chicago Pizza's Original Valley location. They also have 5 locations on East Valley, 1 in Queen Creek, Ahwatukee, Santan Valley, Gilbert, and South Chandler. And there's a 6th Vero restaurant in Flagstaff, 2 hours north or so in the northern rim of Arizona. So, guys, that's pretty cool. But here they are. Here are the top 10 restaurants receiving recognition from Yelp. Okay. Heirloom Pizza, Monterey, California. Carmine's Pie House in Jacksonville. Vero Chicago Pizza, guys, in Queen Creek, Arizona. Kudos to you, Vero, for having amazing Chicago-style pizza right here in the Phoenix area. Okay, almost done, guys, but Land C just purchased a big 14-acre plot of land. Land C Homes is going to make a gated subdivision here right inside the Loop 202 by University Drive. So another quick development that's going to be happening there. We're going to be building more homes, and that's right out by the East Mark Master Plan community. So the builder is selling 2 homes at 2 neighborhoods within the East Mark Master Plan community, and they will now have this this smaller division, 14 acres of homes right here they're going to be building on as well. So that's cool. And then the rare penthouse for sale in Old Town Scottsdale, guys. Check this out. $4.7 million at Scottsdale Waterfront. There's the address, and for that, you can see it right here. Here is the view you have at the top deck of this property. So, guys, $4.7 million. You are having some amazing photos, and look at that. You're right by the Scottsdale Fashion Square. Just an absolutely incredible location. You have the Caesars Republic brand new hotel right there. That's really swanky. You have, look at the pictures. Just Scottsdale Waterfront is top-notch concierge service. I mean, look at your views. Those are off your balcony right here that wraps around. I mean, this is just outstanding if you like the urban living of any city for that matter, let alone in Old Town Scottsdale. So look at that, guys. Beautiful stuff. Love showing you guys photos of properties and, of course, all the grounds nearby. There's the building right there. There's 2 buildings, the Scottsdale Waterfront. But you have access to everything. And, of course, you can't forget about the rooftop pool. Look at that, guys. Woo! $4.7 million. This could be yours. We'd love to help you out with it. I remember the grand opening. I was in real estate, and it was 07, 06. Jeff Edmonds, when he had the grand opening of Scottsdale Waterfront, guys. And so if you have any questions about Scottsdale Waterfront, let me know. We'll be happy to help you guys with that. And what's the square footage on this one? This one's currently sits at 3,898 square feet. So almost for 4,000 square feet, you're paying $4.7 million. And you have 3 guaranteed spaces down in the underground parking. Full concierge service. It is awesome. You get lockers. I mean, it is really, really cool what they do there for the Scottsdale Waterfront. Now, the HOA dues, a little hefty. HOA dues are $3,579 a month, okay? And then you have some assessments, but we can go into details on that later. Last but not least, let's go to Steak 44, Ocean 44, guys. If you like eating out and like high-end steak houses, well, these two are hard to beat in the Phoenix and the Scottsdale area. Steak 44 and Ocean 44 bring on research chef to expand their menu. Their Steak 44, guys, it is an amazing place to go eat. I would highly recommend it. And The Scottsdale company behind fine dining restaurants such as Steak 44, Dominic's, and Ocean 44 has hired a new research and development chef to bring new ideas and flavors to the menu. This is going to be awesome, guys, because it's already phenomenal. And this guy's going, man, that's a big job. That's a big job. That's a big order, okay? Because it's already really, really good. If you have a chance to go to Ocean 44 or Steak 44, I highly, highly recommend it. And if you don't, guys, let me give you a tip. Here's the deal. If you want a really good steak and it's not on menu, this is not on menu, okay? Just go there and order the butcher's cut. And when you order the butcher's cut, don't get any toppings. Just butcher's cut, have them cooked how you want it, and it is the best piece of meat you will ever have. Okay, just take my word for it. Okay, it melts in your mouth, and it's not on the menu. It is outstanding, guys. So, anyways, man, is it lunchtime yet? Oh man, is it dinner time yet? I can't wait. But anyways, this is fun, guys. There's some cool stuff on the menu. So check that out if you get a chance, guys. And that for this edition, Monday edition of YouTube Live, pretty much wraps it up, guys. Thank you so much for spending your time today with me. I love this. Love bringing the news to you, our local news channel here, our local media channel. And thank you for YouTube for giving us this platform to do this. If you have any questions, reach out to us, guys. Click on the link below. We have a Calendly link below in the description. Book a 15-minute discovery strategy call with me about any questions you have. I'd love to do that with you guys. I enjoy this. I'm passionate about it. Or download our buyers or sellers guides below in the description as well. If you're thinking about buying or selling, that will give you a ton of information, guys. And until next week, keep it classy, Phoenix. We'll talk to you soon.